Welcome to Blockchain Recorded, the podcast for the tech curious, where we talk about anything and everything related to the exponentially evolving crypto, blockchain, and Web 3.0 space. Our mission is simple: to share knowledge, facilitate discourse, and help evolve education in blockchain fundamentals, decentralization solutions, and relevant use cases for today's digital economy. We at Blockchain Recorded are not registered investment advisors and do not deal with financial or trading token elements, nor offer any licensed financial services. The content of this podcast is for informational and educational purposes only, while the opinions of all parties involved are their own. I'm your host, Nina Tserar, and now let's talk blockchain. Before I introduce our guest today, I'd like to remind everyone to follow us on X, Recorded Podcast, where we pre-stream each episode on Spaces, the day before distribution to all major podcast platforms. For the full platform list, visit our website, blockchainrecorded.com. With us today, we have Vijay Lakshminarayanan. I hope I pronounced that correctly. The founder, CEO, and lead developer at VCRED. Vijay, welcome to Blockchain Recorded.
Thank you. Thank you for having me.
So Vijay has been in the Web3 space since 2019, from building prototypes and hackathons to leading a DeFi startup, which obviously we'll talk about today. He is also a lead developer with more than a decade of experience in software development for trading automotive applications with focus on machine learning. Vijay, you have quite an extensive background from the research that I've read. I understand with all your background, you fell into the rabbit hole of blockchain. How did it happen?
Oh, it's a long story, so...
Well, we have time. Everybody gets the question.
Yeah. So basically, like my experience, and as you mentioned in the podcast, like I was working on like building software for automotive applications, and in general from firmware all the way down at the base layer to the top application layer. That was going in parallel, and during that time, around 2019, when I was first started looking at BTC, Bitcoin, Ethereum, and so on, like I was just really curious as to like how easy it was to trade, how easy it was to go ahead and go purchase something. This is something magical which has some kind of a value attached to it. So that got me really interested. And then I listened to some lectures from Andreas Antonopoulos on Bitcoin, Vitalik from Ethereum. And it was sort of like inspired, because till that point in time, it was almost like I thought of the concepts, the abstract concepts of money, the abstract concepts of, getting something out of from that money for value. All those things were like something which I took for granted. But these insights completely changed my, my attitude and my thinking and how I value and how I view assets and liabilities and all that. So that's when I started, using my software expertise to try to just figure out trading and try to see and it was almost magical the first time when I clicked the button and, it just I could just execute a trade online with someone. And that's how I just got into this rabbit hole, I guess. And then I started participating in hackathons, started building prototypes, and started doing basic arbitrage. And then it just went on, and suddenly I realized I was just deep in the rabbit hole.
Yeah, once you get sucked in, it's pretty hard to you can never look back and walk away. I almost feel like for most of us. But I found it interesting because you have the background with software development, and you actually were interested in the trading part. You mentioned, and you also mentioned, I'm an ex-finance person, so assets, liabilities. I'm just curious, what triggered you to think of it in that way?
So maybe this is a little bit off topic, but in general, right, when you look at, when you go to a bank or when you try to get a loan, you just, you're so used to filling out all these documents, or when you're having so let's say something, you go to a shop and they say this is priced at say $32 or 32 pounds or euros, and you just accept that and you just look at that at face value. But what I realized is once crypto assets like Bitcoin, Ethereum and all that came about, and then you had all these other tokens, everything coming about, what you then realize is, oh, okay, so you could have any of this. And then you think, what is fundamentally money? What is fiat? oh, so some government says this and then this is money, but it's backed by gold. And then like I was just actually reading about economy and reading about like how exactly did they do it, and then there was this interesting concept of like I was reading about an agricultural article which was saying like how basic arbitrage, I'll go into arbitrage later, but about how it was done. Like you had like a bushel of cotton, for example, which was sold somewhere, and this place was like thousands of miles from another place, and so each person could charge a different value for the same bushel of cotton, for example. Or this could be like like food, like rice, for example. Like rice at one place could be charged at a different price than rice at another place, even though it's exactly the same, and probably they can charge more. And then like I was like, then it got me thinking like why is this different, why is that different? And that's why I got really interested in trading and financial applications as well. But fundamentally, my focus is like writing code. There is actually a saying like, when people ask, how do people magically create value? And like there is a interesting definition for a software engineer. Like that's what we do. Like, what we do is sometimes actually like magic, but yeah.
Yeah.
And I thought we could use it in trading.
I would actually, sometimes with what you guys do is sounds like magic to me. It looks like it. Very interesting. So what motivated you to start VCRED?
So first of all, VCRED means like virtual credit. That's how we short formed it in VCRED. So around 2020, 2021, I participated in hackathons, and hackathons are another way where like you go out there and you just code, or you just like meet either random people or like bounce some ideas, start building something, and over like a really short duration, like say a week or something, you build something. And that's normally like a crude prototype, which is like more capability that this particular concept is useful, or which can be scaled and so on. So with that, I participated in several hackathons, and one of the hackathons I participated around the end of 2021, organized by the Encode Club. In that, what I built was like one of an early flash loan, and a flash loan is something where like you can. You're trying to like deposit borrow one asset over a short duration, and then you deposit into another place, and you try to do something, and then you borrow that back, and then you deposit here, and it's like you do that over like a extremely short duration. So for a really short duration, you're like sort of like a millionaire, like a virtual millionaire, let's say. So anyway, this I tried to do that, and I built like a full stack prototype. In the sense, by full stack meaning like I did like a really crude website, and like did the backend as well, and then did the actual transaction. And this got the attention of some of our early investors, and also the Avalanche blockchain as well. And they invested in us, and with that, like I went out there. It was just me building it at scratch initially, and then I used that to build a team and so on. And what was the motivation for doing this? It's basically like what I found is when you talk about complex concepts like trading, market making, and so on within DeFi, what I realized is like there is a lot of repetitive action. There's a barrier to entry, first of all, for retail users and for other users. That's one aspect. The second aspect is a lot of the actions are repetitive. And then the third aspect is, the complexity is not abstracted away. Users are required to understand a bit more in detail. And this goes back to the example where like, when people are building the early phones, for example, like in the early cell phones, all you need to know is, you needed to know like, when I press this is how the MMS is sent. Like right now, you don't even know the difference between like say a message, attaching a video and all that. But whereas in the past, there was actually even a difference between a simple message and a media message, and attaching a video and all of that. So whenever you're an early adopter, you need to know actually like a lot of details of the tech stack to even use it. But as you go further and further away, all you need to know is like I press something and something happens. Like let's say we do a FaceTime video call. We don't even know like how exactly the FaceTime video call is happening and synchronously and all that. So it's similar in DeFi as well. Like we want people to be abstracted away from all these technical complexities. And so to do that, we'll need to build like some level of an application layer on top of the blockchain itself is like the base layer. Then we need to build the application layer. And on top of the application layer, you can build like other stuff. And that's what we wanted to do with VCRED. And that was my motivation. And I wanted to build this application layer.
So you're tackling a solution within DeFi. And before actually we dive into, because there's going to be some terminology that perhaps maybe our audience is not familiar with, because it does run into the concepts of trading and arbitrage, etc. Maybe I should ask you this question first. Is anyone else doing what you're doing that you know of?
There are...
like, how are you different than maybe some of the other projects that are... Is there anyone tackling the same solution that you are?
So this is actually a slightly philosophical question in the sense like everyone in the DeFi space is tackling a similar set of problems, but there are not many projects which are exactly tackling what we are trying to do. Like it's sort of like a niche in the sense that we are using machine learning and AI on the one side, and then also we are trying to abstract away the automation part and so on. So maybe I can try to explain the terminology first, and then that will tell you like, you know, which exact aspect.
Let's do that. That would be great.
So the first part would be, the first part of the terminology would be liquidity. So maybe we can go through the basics on what exactly is liquidity. So if you look at, let's say, an asset, let's take, for example, something as simple as a juice bottle, right? Say the juice bottle is priced at, say, $1 in the open market. And you have like millions of people who are willing to buy it at that particular price. And millions of people are trying to sell it at that particular price. And that's something which is very, very like a liquid, essentially like a liquid commodity. But if you take something like a painting, let's say something drawn by Picasso,
right,
that is priced maybe, let's say, $2 million, for example. There might not be a lot of buyers and there might not be a lot of sellers. And imagine if for some reason there is, someone finds something bad about Picasso, or there is some reputational damage, whatever. And suddenly there are a lot of people wanting to buy it $500 or something like that. Like the price simply crashes, just as an example. And you have two buyers at like, say, 800K and 750K, like they want to buy at that price. But then there is a lot of these buyers at $500, and then the sellers start panicking, and then the buyers start dropping, and then it just crashes. So that's the other side. Now, what exactly is the fundamental thing which is happening here? That's liquidity. So when you have like a very, very liquid market, what it means is like you have lots of people who are like, buying, lots of people are selling. The asset itself is, virtually backed by all these liquidity, as they call it, the cash flow, which is coming in both sides. So this is like a fundamental problem in DeFi in general. If you look at the price action which is going on with Bitcoin and so on, right? This is what is happening in the sense like you're not having like millions of buyers and millions of sellers. And this is not going to change, because if you look at fiat, like dollars and so on, right? Like you're going to have like billions of people like buying and selling at both sides. So obviously you cannot compete with that, and that will take time to adopt. And it's also not a competition because it's a completely different class. This is an asset class and not that. So that to give you is like a very like a broad overview of liquidity in general. So liquidity, low liquidity. So what's the takeaway from this? Low liquidity means you're going to have extremely high volatility. You're going to have like massive price changes. Liquidity also makes that slippage, in the sense like when you want to sell, let's say, like going back to the painting example, if you want to sell, let's say, $800,000, like if you're at 1 million and then you suddenly get one buyer who says like, 800K, you immediately want to sell because you know that there are not too many people below that price who want to buy from that. This is the slippage aspect of it. And when you have like very low slippage, it means that sellers and buyers, they trust like, whenever I sell, it's going to sell. But when you have high slippage, obviously you're going to have a much bigger price impact. And so this also affects how you're going to sell. So the whole part is the first, shall we say, cornerstone of DeFi. And then the next part we talk about is arbitrage. So arbitrage essentially is looking at price inefficiencies across different exchanges. So when I was first building like the prototype, right, at a hackathon, and this is what I was trying to build on, like looking at different exchanges, having price, looking at the price difference between different exchanges, and using this virtual like flash loan part to borrow from one at that particular price and then sell it at another place, and then borrow from the other, sell it at another place, and then just use that arbitrage opportunity to generate reward. So this is actually, maybe I can just go a little bit more in detail if you want about the arbitrage.
Sure. Yeah, I'm actually fascinated by it.
Cool. So like this is going back to the, the roots of like, cotton, rice, the commodities part, right?
Right. Yes.
So whenever you have, let's say, commodity A, which is at a certain price in a certain place or a certain point in time in a certain space somewhere, and then you have the same commodity A, but in a different place, the goal should be like both places should have the same price, because the buyer and the seller has the same amount of information about the commodity. So they should have it at the same price.
They should.
But this never happens.
No.
Yeah.
Right.
And this is what arbitrage tries to do. Like there is a cost of the transaction itself. So that should be the maximum price difference. But what you will find is there is a tremendous amount of price difference. And there was one interesting example, like one of the times when there was like a country was like banning like Bitcoin in one of the places, and then the Bitcoin price at that particular thing was like, $40,000 or something like that, or $35,000, and then the other place was like $50,000, and then such a large. But then people saw that and they were like, maybe I could just buy here and sell here. But then what they failed to realize is the cost of the transaction will be so much higher than actually buying and selling here.
So much higher.
So that's just to give you an overview of arbitrage in general. Like the goal is to try to, minimize the price inefficiency, but at the same time making sure that you don't lose too much money in the process of actually doing that. Yeah, that's the part. And then the next point, what I wanted to really go through is vault and, lending and borrowing in general. So I'm sorry, it's turning out to be like a finance class or something.
No, it's fine. It's fine, because I think it's good to delineate some of these fundamentals, which will essentially set the stage for the relevance in VCRED, right?
Yeah. So a vault is again like an old, like a bank or a traditional finance term. Basically, what you do is like you have a place where you can deposit a certain amount of tokens or assets or whatever. And then user can either deposit some collateral and borrow some of these assets and use that to perform whatever, trading, arbitrage, etc. And then he can deposit that back into that particular vault and repay the loan, essentially. So this is like a really basic concept of a vault. You could use this vault to, solve some of the problem, like you could use it to make sure that the arbitrage is efficient, liquidity and so on. And for that, you have to pay like an interest for that guy, because that particular person from whom you have borrowed it from, and so on. And this interest rate mechanism depends on something like utilization. So let's say you have deposited $100 into a vault, and the vault already has like say $1,000. And then on the other side, someone is borrowing from that vault $50. Now this $50, when he borrows it, there is still so much more money left. The utilization rate is really low. So he should pay a lesser amount of interest because he's taking only such a small amount of capital from that. Whereas imagine if the vault is almost full at $950, and then the last $50 when you're borrowing from that, the vault is pretty much close to full. So he would have to pay like a slightly higher interest rate. So this is like the basic mechanism of utilization rate and how it affects the interest rate. Now, this part is abstracted away for you when you're doing in traditional finance in the banks and so on, because you're talking about, like billions of dollars or billions of pounds or euros in that particular exchange or bank and so on. So you don't even think about it. Whereas over here, you have to think about it because, the liquidity is quite low and so on. So there is an impact, and this mechanism has to be clear, like in terms of how the interest rates are calculated and all that. Now, you could incentivize these interest rates with tokens and so on, but that's another big, discussion. But now you get like a gist of what vaults are.
Yes.
Then the last part is exchanges. So we have all these mechanics. So we have the vaults, we have arbitrage, we have, we have liquidity, which is out there.
Yes.
Now we have an exchange. So an exchange is like a marketplace where you're going out there and you have like an asset. You have an asset A which you want to buy, assuming you have some fiat or dollars or USDC and so on, stable coins. Use that to buy that asset, and then you go sell that asset as a seller. You want to go sell that. Obviously, there are two ways of doing it. Like one, you could go just offer it in a decentralized exchange, or you could go do that in a centralized exchange. So an exchange, how that does is like going back to the example, you're going to have like different people bidding and bidding at certain prices. And then there are on the other side, you have a counterparty who is trying to ask, there is buy at that price and so on. So that is essentially a marketplace. And you might have heard of Binance or other centralized exchanges. So centralized exchanges, what they tend to do is like they have like a centralized order book. I'll go to that. But basically you have a place like a ledger where you're storing all that information in a database and using that to match it. The amount itself is held in these vaults, but these vaults are centralized, as in like the user doesn't, have the private keys. So the user doesn't go in, like he can't just withdraw. He has to send a withdrawal request, and then the exchange then matches that information on the private key with that address and then sends that amount back. So the exchange controls all the assets. The exchange also controls the database.
Right. Centralized ones.
Yeah.
Yes.
In a decentralized CLOB, for example, what you have, so there is two aspects. One is the decentralized exchange, as in like a DEX, like Uniswap, for example, where in Uniswap, what you have is nobody has, any idea what is going on. So you have a buyer and a seller coming in. A buyer wants to buy an asset. He sets the price. He goes into a pool and he swaps it. And then there are like some XYZ seller. He has that asset. He then swaps that. That's it. Like, no one has any understanding. So this is how that works. But the problem with that is you don't have like an order book mechanism. Like you don't have, you want to buy it at that price. You don't have that kind of an interface. There is still, of course, concentrated liquidity market makers which try to bridge the gap. Then you have a centralized limit order book exchange where what you have is a set of buys and sells which are placed. You still have a ledger-like functionality, but the key difference is everything is in a smart contract. So users can withdraw their own capital whenever they want. They deposit into the vault, and then from that vault, they then place a buy or place a sell. So that's the centralized limit order book exchange.
This was thanks for all this sort of intro to the key terminology. I think it's actually important to understand, and I think it's okay that we took a few steps back, because now we get to where does VCRED come in, and if I may, I noticed a quote on your website. I'm actually going to read it off because I'd like, if you don't mind, then take the next step. If you wouldn't mind taking the next step and maybe explain, because now we're adding a little bit more meaning to this. So your website states a liquidity layer on top of, you call it, CLOBs, using AI engine, enabling anyone to supply liquidity and leverage complex market-making strategies. So how would you explain this to maybe an average person?
Got it. So now that I explained the previous concepts, right? And this is where, going back to the question, what you asked about how is VCRED different from other DeFi projects. So this is essentially our differentiator. I hope I've set the stage so that you can get that difference.
The AI. Yeah, sure.
Yeah. So
absolutely.
In terms of the code, so what are we trying to do? So first step, like I explained, the centralized limit order book exchanges or centralized limit order books, where you have on the one side, you have an order book with buys and sells being there, and then which is connected to a smart contract and so on. So first thing is, these exchanges, it's not as big as Binance or any of the big centralized exchanges, right? So they are still in the early stages, so they will not have enough liquidity. So they will have some volume, some liquidity, but not enough to supply a large range of assets. That's the first problem what they are facing. Then the next problem what they would face is to have enough activity, in the sense like enough users coming in who can go access that, because there's still going to be some complexity in accessing that even if the UX is simple. On the other side, anyone who wants to get access to, say, market making or taking and so on, these are complex strategies. So maybe like how I explained about how you want to go ahead and for example, like the painting example, like where you have one buyer at 800,000, another buyer at say 700,000, when the painting itself was like 1 million. What you want to do is, as a market maker, you want to make sure that you supply enough liquidity at different sites, so that you sort of soften the blow for him when something when someone says Picasso is bad, and then the price drops to $500, for example. But then at the other end, you will not have enough liquidity. So you want to have some sort of a mechanism where you make this process more efficient. Because otherwise, what's the difference between a complex market making strategy and just something regular like an insurance company where you're just trying to hedge both sides? Sure.
You can argue that. Yeah, of course.
Yeah. So that's where the machine learning part. So if someone asks me on the street, what exactly we do. So what we are doing is we're using AI to provide a liquidity layer, like an application layer, which will just be on top of all DeFi protocols, which are, centralized limit order book exchanges, so that users can have access to any centralized limit order book exchange, any asset, where they supply liquidity, so they get benefits from these limit order book exchanges. And in return, they get some sort of a risk-adjusted reward. So they will have some risk because they are staking into these early exchanges. So the exchange itself might have an issue, or our contracts might have an issue, any of those issue. But in return, what they get is to be a part of this early stage, this early revolution, what is happening. So why are the exchanges sort of incentivizing them? Because everyone in this is more like a market where, compared to the bigger centralized exchanges, the smaller exchanges do not get enough traffic, enough traction, enough volume. And so that's one major thing. So you get to be a part of that early revolution as well. And the second thing, what we are trying to do is, with this kind of a liquidity layer, users get to participate and be their own market maker, their own kind of a strategy. And in a sense, what we have is a two-sided marketplace. So on the one side of the market, what we are trying to do is we are trying to make sure that the centralized limit order book exchanges and protocols, they get to have a lot of initial growth. And then on the other side, we have the users who are able to get access to these exchanges where, yes, they can go and they can trade on their own. They can do all that. But instead, if they want to do something where, they don't have the time to deploy complex strategies, they don't want to go out there, write their own code, they can then use our vaults. Or if they're developers, they can harness some of our strategies and build something even more complex on top. That's what we offer, on both sides of the marketplace. And that's the liquidity layer.
This AI liquidity layer, I read your Medium article. This is something that you developed in-house.
Yes, exactly.
This is something that you developed?
Yeah.
Or together with your team?
Yeah.
And so how does it then fit in? I understand conceptually how it fits in, but how does it do? How did you program it to do all that? This is where I'm a complete layperson, and this is where you mentioned before the magic, right? I think just automatically, I think we have this psychological factor of AI. I think we're still trying to understand what AI in this context really is. But what was your how did you even go about coding this? and just I can't even, I'm trying to even formulate the right question, because I just find it fascinating that someone can actually do that. Then you can develop your own AI liquidity layer.
Yeah.
I'll turn the table to you, because
no problem.
I'm not even sure how to even, what is this layer essentially? How does it function?
Yeah.
Like, how does it fit then in the picture?
Got it. So AI aspects. So basically, like this goes back to my previous experience as well. Several years back, and by the way, 7 or 8 years back, if you ask someone, they would say they are working in neural networks, because that was the correct term.
Right.
So everyone used neural networks, and we thought AI was a marketing term.
Okay.
Because ultimately, if you look at it, everything, it's a form of statistics and regularization and so on, and then the layers of complexity grow up. So that's my first thing to you. Like whenever people say AI, you will have to dig a little bit deeper into what exactly they're using, what kind of models they're using. Are they actually some projects are just a front end for ChatGPT. Like they just use ChatGPT model in the back end, and all they do is put a wrapper on it. And this is where we differentiated as well from other AI projects in general. In that, of course, we didn't build different models from scratch. Obviously, you have to build on existing models, but at the same time, this has to fit, and this has to be redesigned and redeveloped so that it fits into what works in the current market and so on. So
Sorry if I may interject here, because you mentioned ChatGPT, right? I mean, the AI in ChatGPT still, it has to feed from somewhere, right? It has to feed from the information that is available, and it feeds. So how does then your model work? You said that it feeds through different models.
Yep.
This is where I get confused.
Got it. So if you look at ChatGPT and all that, that is a large language model.
Right. That's, yeah.
Yeah. So basically, that is just trying to get information based on text, and all it's doing is it's trying to predict the next one. It's a form of a transformer architecture. And so if you look at all these transformer architectures, right, it's just trying to predict, given a sentence, say if you're trying to say rabbit, for example, it just knows that, okay, the next word, the next letter is RABBIT based on how the sentence is. And then based on the rabbit, it could be Who Framed Roger Rabbit, for example, like a movie name, or it could be that.
Right.
And all it does is sentence completion, and it just predicts. And it's just incredible that just with that, you could ask any question and it's able to answer and so on. And it also makes a lot of intellectual leaps, which could be called hallucination. So that's another thing, So that's one completely different layer. The problem is those kind of large language models cannot be directly utilized in anything financial directly, simply because let's just assume that you feed it the complete works of all the financial experts and then tell it to build a liquidity layer for me. Or you can just, write that in ChatGPT, for example, like a prompt, I'll write 100 prompts and try to get that. What you'll find is the code is completely unusable, simply because it's just trying to see what has been done in the past, what has happened, from some of the previous data, and then use that. And there is a saying, right? The future rhymes with the past, but it doesn't exactly follow the past.
Yes.
What we use in financial circles. So this is one of the major things. You cannot use large language models directly. You will have to do a lot of post-processing. And even with that, what you'll find is it's almost like it breaks down to a series of if-then-else rules. That's one aspect. Then the next aspect is there are a lot of trading bots available, and this way I want to differentiate a difference between a bot and an agent. So a bot is something where you just tell it mindlessly, just go out there, buy something, sell something when it hits a certain price, and that's it.
Right.
That's not what we want actually, because that is something which is quite limiting. And what we want is an agent where we try to give it a little bit more authority. So it thinks a little bit. It says okay, if this happens, then I have to do something. I have to do that. So the complexity builds up. So what we try to do when we are doing this is like use existing statistical research, build like a time series model where over a period of time how things behave and so on. Then with that try to like build our own agent. So these agents will go out there and they will perform whether it is trading, whether it is liquidity management and so on. They do that, and we combine all of that into this liquidity layer.
Are you working or getting also, I don't know, feedback or interaction with actual, for example, arbitrage traders? Because what you're explaining, this entire concept is, and if I'm not mistaken, also on your website, it states that this is a potential disruptor to the human form of trading, right? Do you get any feedback on? I mean, would this scare somebody if it's like an AI thing, or actually do they embrace it? Or have you gotten any feedback in this sense?
No, because I think this is where like there is this kind of like AI fear comes in and all that.
Yes.
I think we are a long way away.
Yeah. Because there's also good AI, of course.
Yeah, it's not going to like I'm firmly of the opinion like this is not going to replace humans. But what will happen is like a human with this tool will have, like they say, the human with this tool will actually be way ahead of others. It's almost like when Excel was first discovered, like when Excel was first invented, right? Like a person who's trained in Excel will be like way better than others, and like he will push far ahead. So users using this vault, for example, or users who are deploying these strategies or deploying that, they will have a much higher head start. And also the other side, the CLOBs you're using it, they will have a higher head start. So that's what it is. It's more like an amplifier. It's more like an amplifier.
That's actually a good term to use. But then what happens when everybody starts using this? Because Excel didn't start reinventing itself. Then when you say that you have these, this smart AI layer, and what if everybody's using this? Where does it go from there?
Oh, if everybody is using it, I will be like, that'll be incredible. I will be even happy, like even if like say 0.1% or 1% of the customer base starts using it and then like doing that. But if everyone uses that, then like what that means is like people will then innovate to the next level. And this is what happened, right? Like with phones in general, like what we are going back to that example, like you have like first, like, build a modem, for example, like and an antenna, and then everyone uses the antenna. So the antenna goes down and then like people, forget about that. Then it goes to SMS and MMS. And then from there, it just keeps going on, like the layers of abstraction. And what you will end up happening is like the user in the end, like all he does is like, he presses a button and this just, goes to the. So maybe I'll try to explain about how we characterize VCRED, and then I can then go to the long-term vision maybe, and then.
That was actually what I was going to get to next. Yeah. Yeah, exactly. Because you've explained the technicals and then what's the AI component. But what exactly then is VCRED? Exactly what you just said. How would you characterize it? Is it a protocol, simple smart contract? Is it an AI backend, etc.?
Yeah, thank you for that. Because this is also a question which people ask in general, like whenever they look at Web3 projects, like they just either look at it as a dApp, like a decentralized app, and they simply say this is just a decentralized app, or just a smart contract with some bit of a trading bot or something like that. But what they miss is like how we want to characterize it is it's not just a simple smart contract or a backend. It's several things. So one of the key components of building like an AI liquidity layer or a model is data. What you need is data not just from simple interactions between one project to another project, or one token to another token, or one CLOB. You need to collate all that information, use that information to build like analysis and so on. So that's one part, the data part. So we call that like a data lake. Then the second part is you need to have an AI backend which looks at all this part and like, which abstracts away the strategies. So this is the whole thing is an AI strategy. Then we have like a series of smart contracts where the users interact and where they can stake, where they can go into the vault, for example. So finally, all encompassing that, this is like a protocol where users can, not just users, developers can come in, they can build on top of the protocol. So that's why it's almost like a combination of an infrastructure layer and an application.
And so Avalanche is the team that approached you. Is this why was the decision to build on Avalanche?
When we first started, like what we are looking at is something which has EVM compatibility, which is Ethereum virtual machine compatibility.
Yes.
And secondly, somewhere where the technicals are sound and where like we can then go in and deploy, and also where there is like a good growth trajectory in terms of like bringing like more and more integration. So those are also the reasons why we decided like we'll just go ahead and build on Avalanche. So in terms of deployment, yes, we can actually deploy on any Ethereum virtual machine compatible chain. We can go ahead and deploy, and also that's also our strength in terms of the AI backend. This can be integrated with any CLOB because that's our goal. We want to be integrated with any CLOB out there. But at the same time, from a user perspective, and from a developer perspective, developers and users are quite easy to use EVM. So we need to make sure that they can just come in and, interact. And that's why our first protocol where we will try to launch will be in Avalanche. And that's also one of the main reasons. But yeah, we support as well any EVM chain. Yeah.
Okay. So, and where are you now in development?
So in terms of development, we have just started like about 2 months back. We were working with one of the CLOB, Hubble. So with Hubble Exchange, we deployed, and just 2 days back, we reached about $140,000 in volume.
Oh, congratulations.
Thank you. So there is still work to be done. We need to scale, and this just the first start, like the big stepping stone, and we need to deploy on more and more CLOBs, and we need to like expand and just grow. That's our goal. And as we grow, we want to make sure that our implementation is more robust. The execution part, the execution layer, how we get the data and how it keeps repeating and being consistent. So that's our goal. We also want to make sure that the AI model itself is becoming more and more advanced. Initially, currently what we have deployed, these are, shall we say, more simpler models, but we want to make sure that we have more complex models. We have vaults which are going to be accessible by the users as well. We want to make sure that the UX part of it is improved. We currently have like a website where we can go and interact and do that, but we also want to make sure that that's open only after a lot more testing and a lot more audit. We're currently on this kind of a closed beta where users can come in and they can just apply, but we want to make it more like invite only. We want to have only specific developers so that we get more focused or feedback. But anyone is free to join on our Discord and try to ask questions and try to help us in the journey.
I just want to, when you mentioned AI again, I forgot to ask you a question when I was reading the Medium article. What are alpha factors with respect to, you mentioned AI, your AI engine is done in-house, and then the article refers to these alpha factors.
Oh, so this was actually more in terms of alpha in general in Web3 or trading is basically you have some insight on some product, because bear in mind that one of the problems what anyone in trading faces is they have to somehow predict the future. In no other occupation or no other discipline are you expected to predict the future, and your success or failure is determined by that. And so alpha is your way of having some insight into the information asymmetry. So it's all about information. You have some information and something is going to happen. And AI, what you're trying to do using AI is you're trying to sort of have some idea, and this is what we call as an alpha factor. When we have this insight and when we go ahead and say predict like in our time series, let me rephrase it. So we go ahead and we have an insight, and with that, the trading model then makes an execution. Then there is like a head start over, let's say, someone who has no information at all and who just blindly goes and buys or sells. So that's sort of like a very rough explanation. I tried to make it really simple. Yeah.
I see. Yeah. No. It's I'm trying to piece together the mosaic of all the different components. But sorry, I sort of backtracked our conversation. You were talking about sort of where you are now and what your milestones have been now and what you're doing. So, and of course, I'm going to pick your brain a little bit more about,
of course,
the whole AI vision and VCRED's vision. But before, so just to sort of wrap up, what you're working on now and where you are in the process. So what are then sort of the core products that VCRED is currently focusing on?
So our core product essentially is we have a two-sided marketplace.
Yes.
On the one side, what we are interested in is centralized limit order book exchanges.
Yes.
Trading marketplaces who are, have just launched or just started, and who need traction, who need liquidity, who are looking to integrate with us and make sure that users have access to our algorithmic AI market making engine, which will drive up. And then on the other side, what we are looking at is retail or institutional users who want to have access to the products. So we offer for the centralized limit order book exchanges, maker vaults and so on, where they don't need to approach like a traditional market maker, pay a service fee and so on. So what they essentially have is the power of AI. And the reason why, for example, like compared to say a big market maker, is that AI is a great leveler in that respect. Because what we need to do is write a series of code. We don't need like say a fancy office. We don't need like say 25, 30 traders, you might see on like Wall Street or something where like everyone is glued to their terminal in like a big office. You have to pay for rent, you have to pay for all the salaries and all that. Instead, we try to replace that with say a few people, sitting on their sweatshirts in like a house like or an apartment and just, coding that away. So A, barrier of entry is reduced a lot. And B, the cost of doing that business part, which is like, trying to engage all these people, that's also reduced a lot. And with that, the go-to-market for these exchanges is really fast. Like they can just start from this and they can go really quickly. They can just access this, show this volume and show this liquidity. And with that liquidity, more buyers come in. So for them, they can just go from point A to point B really quickly. That's on the centralized limit order book exchanges side. On the user side, what we then offer is like two different products. One we call as a delta neutral lending vault, where users go in, they stake, tokens, what they have, and they get like let's say like a certain interest rate. And at this interest, like they are able to get like say 5%, 6%, whatever it is. So they have like almost like sort of like a risk-free product. Of course, you have contract risk and all that. That's one product what they have. And then the second product what they have is an order book vault, where they get to directly connect to the AI engine without having this. So in the previous product, we borrow from that. That is by we, I mean the AI agents, they borrow from that. And then they do the market making and then they repay back with collateral back. So that's why it's like a risk-free product. They just earn like a smaller interest rate. Or you have this other product where we call it the order book vault, where they stake and they have to they have exposure to the risk. So it's more risky. But at the same time, they have like more profit as well when it's trading. It's not as risky as just directly trading, but at the same time, it's not like as risk averse and just generating like small yield like that. So those are the two products. So we have an order book vault and we have a lending vault for the regular users. And on the other side, we have for the CLOBs, what we offer is this full like a market making package where they are just coming in. They get access to liquidity through these users. So we are sort of like connecting the two. by we, I mean the AI agents, completely removing middlemen, layers, projects, and so on.
It's pretty amazing. When you mentioned who are actually a few steps back. So you are looking to attract then who? You mentioned institutional users, and who by your definition would be regular users? Are these mainly just traders, or who all can actually use your products?
So I would like to say everyone, but the problem is, with the regulation and, with the risk associated with that, because there is for example, on the risky products, right? We would like to offer that to everyone. But then on the other hand, some users may not, everyone likes it when things are profitable. But, when you have like a slight drawdown, they would then have like a worry or issue, and then they would like to immediately withdraw. So in a sense, like we would offer it to users who understand the risks involved on the order book vault. The lending product, we would like to open it to institutional users and other users. What we want to do is, like on the order book vault, we will any of the incentives which are coming from the exchanges, because that's why we are not trying to be like a middleman or a gatekeeper. Like we have is the AI part, which is like, working on both sides programmatically. So it will stream any of the incentives from the limit order book exchanges. So whether it's airdrops, whether it's, their own tokens, or whether the ecosystem where we are building, they have a token. So what you have is like, you take some risk, and then in return, what you're getting is like some of these ecosystem tokens, points, and so on. So this means that they have like a completely new access to a risk reward profile, which is different from, say, the standard profile what is existing in other DeFi projects. And B, you get to be part of an early part of these ecosystems and these exchanges, which you cannot easily be. Like if you go and trade, like say for $10, $20, $1,000, and so on, you get access to some tokens, but instead you can just stake here directly and get access to all of that. So that's what we're building, and this is some of the core products.
Yeah, it does. I'll let you catch your breath. I know that you have drink some water because you're doing a lot of explaining, and thank you for that. It's a complex topic, so it's very welcoming that you're doing this explanation. But yeah, like you said, there is a lot of risk inherently involved in this. So that was sort of what I was gearing at. Who all could use this? And does this mean that you're approaching, I don't know, for example, just your regular institutional, also just TradFi investment banks? Or is this more people who are currently just dedicated to DeFi?
So initially it will be dedicated to DeFi, or at least users who understand the, how DeFi works. So that'll be our first audience. And then as we scale, that's when we go to the global audience. But initially it'll be DeFi retail users. But even the DeFi users, like when I say DeFi users, like they're not like, projects or someone. There's still like a lot of retail users and who are in DeFi. So it's attracting them. Then we attract institutional users as well. And also in parallel, we want to attract the centralized limit order book exchanges. So our primary goal first is the exchanges, the projects, and then we go to traders, and then we go to DeFi users, and then we go to everyone. Yeah, that's like the scale.
Of course. Yeah, that's like the end, the ultimate goal, which of course makes sense. Vijay, throughout this entire journey, you're the driving machine throughout this entire project. What would you say has been your most difficult? I'm sure you've encountered challenges, but what would you say was your most difficult challenge to overcome? Or have you had a lot of challenges?
Oh, like they say, like every startup, right? Like it's just like it's almost like you go like challenge after challenge.
It's like a roller coaster.
Like some of them are brutal. Yeah. So it's hard. Like if I go through a list of some of the early investors, like the number of people who say no, or the number of people who are like, don't believe in this, or like it's just a lot. But on the other hand, I must say, like there are also some of the investors and some of the users who are like really interested and who feel like, this will solve and so on. The biggest problem I would say is time.
Time.
Building anything in AI takes a lot of time. It's trial and error. It's, checking some of the things. It's, doing that. And this has been one of my biggest challenges so far. It's like the speed to market is really important. But when you're building in something like fundamentally new, which changes everything, like the architecture and all of that, takes a lot of time. And so that has been like my biggest challenge personally, and also for the team, everyone. That's the first thing. Second thing is, I would say the team itself, like it takes a lot of time to hire some of the people. And that's why, like, the AI part, I try to do most of it as well, simply because everyone puts everyone puts AI on their CV, and like they've probably done like a Udemy course or something like that, and then they come in. So it's really hard to find the right people. So that's why I made the decision, like, I will code most of it anyway on the AI side. Like my team does most of the work on, like, the infrastructure, the three part, trying out the testing and so on. And I have like an amazing quantitative engineer as well. Like he does the data science part as well, and so on. So it's the challenge. The second major challenge is, having the right people and trying to have more and more right people. So I don't have anything, shall we say, like different from other startups, I guess. So it's always time, people, and also the, people investing in you and the cost part of it. Like those are all like some of the major challenges. The last part, I would say the other major challenge is the complexity of the product. We tried to simplify it, and that's something we learned over the last few months or so on, like trying to make sure that the message is simple so that users can go in there and understand what we are building and then stake and do that, which means that we had to actually simplify some of our complex algorithms so that it fits. Those are the major challenges. But always, you have, it's a question of time, and with the time, it's a question of the cost involved. And that's been a major challenge.
Well, I can imagine you've had sort of the psychological factor of comfort, the fact that you've had interest in firsthand with the hackathon, right? You were approached as far as I understand. So it's almost like, what they say, when you have a room of 100 people, it only takes one that believes in you, that for you to keep going. It's never easy. And then once you have that and you have backing, and of course, if you have investors, that makes things a lot easier. Then, of course, ironically, even though it's AI, you definitely need the people to set it up, and also the right people, which I can imagine it can be very challenging. I think we've covered a lot of the technicals. I hope that I asked, and actually you did a fantastic job in explaining everything. And like you said, yes, it makes it better in order to understand what you're doing, it's better to take a few steps back and just go step by step in explaining. So that's sort of what our aim is also with this podcast, in trying to just verbalize everything and in simpler concepts, even though it's still a very, very complex project. With the mention of your AI component, and this is a very also futuristic way of doing arbitrage and trading, etc. So you must be looking in the future. Like, what do you expect it to look like 10 years or maybe even 5 years from now? Because everything is evolving so fast and so exponentially, although time is an issue, but it's still, everything is just going so fast. There's so many projects, like you said, there's so many people working in DeFi, sort of maybe tackling one thing in different ways. How do you see DeFi evolving within the next maybe 5 years, sort of the general landscape, and in where VCRED may fit in? And because you must have this in mind, right? Sort of your long-term vision.
So if you look at it, maybe we should first start by painting a landscape of how the world in 2030s would look like. And
sure.
These predictions are always like, a hit and a miss. Like sometimes they actually are way more crazier than how we expect. And sometimes they are like, someone in the 1920s expected us to be in flying cars, but what did
flying cars? Yeah. Like in the 80s with Back to the Future, right?
Exactly. So, but on the other hand, like, if it is on a shorter time scale, right, like over 5 to 10 years, like that's a little bit more easier. So that's why like 2030s would be like a good point, and that's also like more realistic in terms of like where we would be at. So if you look at the landscape, like I read several provocative research articles from Harvard and from some of the others, like what they were saying, and it also makes sense. Like what you would have is what is the expectation which is already there. Just like people expect like 24/7 like perfect decision, like they don't want to like wait 8 to 5. So this goes back to like how in the past, like you have like a fixed time where you go to like say a bank 8 to 5 then you withdraw, and then the rest of the time you don't have cash. Like we come from that analog from that analog world all the way now, like there is a 24/7 expectation of digital access to the like whatever is in your balance and so on. So what you will what is the necessity? So what we need is like cutting edge consumer apps which run at nearly at zero cost. That's what users will expect. What users will expect is they just go out there, they use these AI agents which will become much more prevalent, and they just want to go make a decision like I have this particular asset which I want to stake here. I have this which needs to be done like this, and so on. And they will not expect any kind of like a middleman or any kind of like say an interface. Everything should be seamlessly interactive, and it's just some way of almost like using, whether it's social media or whether it's any of that, they just expect to like quickly share the information, and then someone else sees that, they goes there and so on. So if you notice in this, like they are not actually interested to know whether the settlement is happening in, let's say, which layer one it's happening, like whether it's Avalanche and so on, or if they're using a decentralized or a centralized version, like, are they actually using a blockchain, or are they actually using like an app? They won't even, by they, I mean the consumers, right? Like in the future, they just use it. Like when you use, for example, your phone, you don't even think like, that you have to go select a service provider, you have to use this ISP and all that.
Right.
But once you have done that at a one-time installation,
you don't think about it.
And that's how the users in the future would be. Like they won't think about it. All they do is like, take the phone or, do some of these things. And maybe at that time, it's so advanced, like you're just giving like sort of like information like this, and it happens. So this is sort of like what the financial consumer in the future expects. And so when I was like reading this article, and this was like around like 2021, 2022, I was like thinking like this is where we should be. Like this is what we should try to do. Like we could have used our technical, like when we're building the initial team and we're doing that, we could have actually built like a layer one or like we could have focused on some other infrastructure project. But we thought like AI is so transformative, and we do have the expertise. Like I have so many years of experience, and also my team members also, like they have infrastructure experience, so we should use that to build it. And that was our primary vision, like to look at the financial consumers of the future, what they actually need. And if they need 24/7 access with zero, almost like negligible cost, executing any asset anywhere based on any information what they're getting, and then just do that, like that'll just simply transform it. Like look at how right now, if you want to like say buy something, some token somewhere, or get you want to stake somewhere and get access to an interest or in like a return, you have to do so much research, so much analysis, and then try to understand what each protocol does, and then go out there. All those would be abstracted away. In a sense, what you would have is like a decentralized portfolio manager. That's what everyone would have on their phone. And all you do is like, I have $1,000. This is my risk profile. This is how much I expect to earn. What should I do? That's the question. And then they expect like a honest answer on the other end from the AI agent. And then based on the agent, they then go execute, and then they just carry on with their lives.
Do you think that there would be a higher level of skepticism as we go along? Or Because there has to be a certain level of trust, like you painted the picture with the phone, you grab your phone, you start it. But, in the back, some of us, in the back of our minds, we still think, okay, they're collecting all our data. They want it. There's no privacy, et cetera, et cetera. Do you think that has anything to do with what you're trying to, maybe the level of skepticism of what you're trying to build here? Or is that something that you don't think about?
So that is also the key part, and that's why we are building it as a decentralized Web3 solution. Because in a sense, we could have just, with all the data we collect from, let's say, all the blockchain data what we have collected, we could use that to build like a simple centralized solution where the agent then interacts, and then the users then, instead of staking into like a contract, they just put somewhere else. But that is not the solution, right? That's what in 2030, for example, you would have, obviously you would have like decentralized or centralized. But what I mean is like, it'll be so abstracted away that users then make a choice and they don't see like a big drop in user experience. Then they use like a decentralized application.
Right.
And they would know that, okay, in this case, my data is important. But some users will be willing to say that, okay, they use the data to make some cool predictions. So yeah, let them go ahead and use the data. So it's more like a conscious decision from them. And for that data, they get like more profitable or more excellent detections, and which are then profitable. But maybe on the other hand, some users value their privacy more and they do not want this information out there, and they just simply provide like basic information, and then you get like basic results on top of that. So it's sort of more like a spectrum of privacy. Because bear in mind that if you want like complete privacy, right, like then you have zero information, and based on the zero information, you will not be able to make like predictions, and you will not be able to do some other thing. At the same time, if you share everything, right, maybe we don't even need all that information. So we need only some of it. So that's how the AI agents in the future would be. And this is quite scary in another way, in the sense like this will make not just traders and so on, but also like some of the other white collar jobs, let's say, like this will reduce actually the need for having these kind of fancy offices with investment banks. So when we go further and further in that line, like there'll be like a merge, and when it merges like that, you don't need so much persons. But on the other hand, this will increase the value for users, so it sort of levels the playing field.
Yeah, I like the way you painted that picture. I think that also the first thing is that, like you said, the scary part is that it's going to take away some of the white collar jobs. But, having that fear, sure, on one hand, but there has to be value creation on the other hand. So, yeah. Vijay, this has been quite an exhilarating ride with what you've presented in our talk. I'm just trying to think back. Is there anything that I have not asked that you would want to add, or perhaps are there any key takeaways that I haven't asked about, maybe that I have missed in our conversation?
So not that you missed, but more like, to summarize, what we are trying to do is something innovative in using AI in DeFi, and trying to build like a whole application layer. And with that, what we hope is to disrupt and bring this vision closer, like what we have in 2030s, where we are actually the AI agents, and we are part of like the major AI agent. And like you said, if everyone starts using it, like one of what you said before, like in the conversation, actually if everyone starts using it, then we become sort of like one of the major players out there, and that's what we hope to be. And it's like I said also in the challenges, it's a long journey always with AI projects, but in return, what you have is like fundamental differences in the way, like for example, OpenAI, everyone looks at it now, but it's started in 2014, right? So that is the thing. Like you have these kind of asynchronous returns. Yeah.
Well, you've kindly shared your vision or the landscape, that the way you see 2030, or also what some of these provocative articles that you've read have talked about. So you touched upon the long-term vision. So what's in store for VCRED's short-term roadmap?
So the short-term roadmap is this quarter, we have integrated with one of the CLOBs. We are going to integrate with several more perpetual exchanges. And then we want to make sure that we integrate with several more and start scaling. So quarter one, that is this quarter, we want to make sure that we are ready for a launch. And this will be more like a launch of our product. So it's not like a big bang launch because we already like sort of done the beta testing and sort of doing all that smaller launches, and this sort of keeps going on. And then as we go further along this year, what we want to do is eventually have some more access to newer products and tokens and so on. And finally, at the end of the year, we will go towards the next version as well. But this will be like the major version where we have all the AI liquidity layer aspects covered, and so that users can go in, already start, staking into our vaults, getting access to all the incredible tools what the AI product layer offers.
Awesome. Well, Vijay, thanks so much for taking us on this DeFi AI journey. It's another angle that I personally enjoyed exploring, although admittedly complex, but you definitely managed to bring it closer for me to understand and hopefully also our audience. I honestly wish you and your team all the best with VCRED and really look forward to hearing about your evolution and your progress. Just wanted to add, what is the best way to follow your work or perhaps contact your team and, of course, participate?
So you can follow us on Twitter, the Twitter handle, and also you can follow us on Discord, where we have announcements in our channel, and so on. And the other way is like also to participate when we are doing beta testing and when we are doing like our rollouts, when we are starting our early launch, have a look at what we are doing, either participate either as a developer who is trying to integrate or participate in the CLOBs and so on. So those are all the various mechanisms you can contribute to us, and also you can follow us directly.
Perfect. We will include what you just mentioned, the contacts, in our show notes. So with that in mind, thanks so much. That's it for me from my end, from our end. Thanks so much. And like I said, best of luck.
Thank you very much. And looking forward to it and happy to be a part of this.
Thanks so much, Vijay. Thanks again to our guests, and thank you everyone for listening. Thanks also to the Bariam Music team for providing their music. You can check them out on bariammusic.com. The episode supporting information is on our website, blockchainrecorded.com. Our podcast is available on Google, Apple, and Amazon Podcasts, as well as on YouTube, Spotify, and Radio Public. You can follow us on Twitter at Recorded Podcast and YouTube, where we are super grateful for your support. Stay tuned for our next episode.